The Malaysian Anti-Corruption Commission has called on relevant parties to submit information pertaining to allegations of irregularities in the use of 600 billion ringgit worth of public funds by the previous administration under Tan Sri Muhyiddin Yassin. In a statement, the agency said that if necessary, the MACC may also send officers to collect the information or documents. The MACC also reiterated its Chief Commissioner Tan Sri Azambaki's confirmation on Tuesday that the anti-graft body had opened an investigation paper into the allegations. MACC reiterated that it will conduct the probe in a detailed, transparent and professional manner. On Wednesday, the New Straits Times reported that the MACC would summon former PM Muhyiddin as well as former Health Minister Khairi Jamaluddin and ex-Finance Minister Tunku Datuk Sri Zafrul Abdul Aziz to give statements pertaining to the investigation. It also reported that the 600 billion was meant for funds during the COVID-19 pandemic and included money for COVID-19 vaccines. Zafrul, who is currently the Minister of International Trade and Industry, said today that the MACC has yet to contact him, but added that he has nothing to hide and would fully cooperate if called up. This development came after new Prime Minister Datuk Sri Anwar Ibrahim said that the Ministry of Finance had found a breach of procedure in the handling of 600 billion of public funds during Muhyiddin's tenure as Prime Minister. Anwar, who is also Finance Minister, has embarked on a quest to review projects and plans approved by the country's prior administrations in a bid to fulfill his Pakatan Harapan Coalition's election manifesto to fight corruption. Sapura Energy returned to the black for its third quarter of FY23, posting a net profit of 10.2 million versus third quarter FY22's massive net loss of 669.3 million ringgit. According to Sapura's boss filing, the improvement was due to lower recognition of provision for foreseeable losses, lower project costs recognized, lower depreciation, higher share of profit from associates and joint ventures, and a favourable foreign exchange gain during the quarter. In contrast, top line for the quarter fell 12.4% year-on-year to 1.28 billion from 1.46 billion amid lower revenue recognized from the engineering and construction business segment from a lower percentage of completion of executed projects. Moving forward, as part of its efforts to improve overall cash flow, the group said that it has committed to continuing its review of underperforming contracts as well as renegotiating commercial settlements with customers. Sapura is currently finding it challenging to rebuild its order book given the limited access to bank guarantees and working capital facilities during its restructuring phase, particularly impacting the E&C and operations and maintenance business segments. However, Sapura said that its drilling arm managed to record strong growth during the quarter and that its current order book stands at approximately 6.8 billion ringgit. In line with its aim of portfolio rationalization, Sapura recently completed the sale of its 3 drilling rigs to NKD Maritime. Following the Corporate Debt Restructuring Committee of Malaysia's agreement to assist Sapura in mediating its debt restructuring with lenders, the oil and gas group submitted a draft proposed restructuring scheme to CDRC on September 29, 2022. This draft restructuring proposal will form part of Sapura's overall restructuring and regularization plan, which upon finalization will be submitted to Bursa Malaysia. Additionally, Sapura says it is nearing the end of its proof of debt exercise with its trade creditors. Sime Darby Motors, the automotive arm of conglomerate Sime Darby, has earmarked 500 million ringgit to build new showrooms for China's BYD in Malaysia, Bloomberg reports. The planned investment is aimed at establishing a total of 40 showrooms for BYD vehicles in Malaysia by 2024, with the first showroom slated to be opened by mid-December this year at TREC Kuala Lumpur. This will be followed by bringing the BYD Atto 3, an all-electric SUV, into Malaysia after Sime Darby Motors' recent appointment as the official exclusive distributor of BYD vehicles in Malaysia. Sime Darby Motors MD Andrew Basham said BYD's array of world-class vehicles, which feature premium specs at an attractive price point, is said to be a game changer to spur electric vehicle adoption. Basham says that this investment will support its aggressive expansion plans for the brand in Malaysia and reflect its belief in the brand's universal appeal. Founded in 1995 as a rechargeable battery maker, BYD's businesses now encompass automobiles, rail transit, new energy and electronics. It is currently listed in Hong Kong and Shenzhen. The BYD Atto 3 will be available in two variants with prices starting from 149,800 ringgit for the standard range and 167,800 for the extended range. Gamuda has allocated 2 billion for investment in renewable energy businesses over the next 5 financial years. Group Managing Director Dato' Lin Yun Ling says that its RE plans extend beyond Malaysia's borders. He explains that since Australia is a key market for Gamuda, the group is looking to develop some hydro pump projects there in the coming years. Lin adds that Gamuda is not particularly attracted to just being a solar farm contractor and is also in advanced discussion on other large-scale RE assets. He also said that the 2 billion investment will likely be funded by the group's internally generated funds or borrowings, given that Gamuda has almost zero gearing, but adds that it is unlikely to be financed through equity fundraising. Lin also explained that the group's recent 200 million investment in RE player ERS Energy was to tap into its quota in the new enhanced dispatch agreement framework by Tenaga Nasional. He says that Gamuda believes that in years to come, the shift towards RE and green electricity will be very strong and sustained and will yield higher recurring income over the medium term. The Kallang Jaya LRT service overcrowding issue during peak hours is expected to be resolved by the third quarter of 2023, according to Transport Minister Anthony Loke. He says another 18 train sets that are undergoing various maintenance programs will be added to the Kallang Jaya line by the third quarter of 2023 and shorten the train interval time to 3 minutes. Loke said the 38 train sets currently operating on the Kallang Jaya line are catering to about 200,000 passengers daily. He adds that Prasarana has purchased another 19 4-car train sets, of which one will arrive in August 2023. He was speaking at a press conference after meeting with Prasarana, owner-operator of the country's public transport services, namely the LRT, KL Monorail and the MRT lines. When asked if a change of leadership was imminent in Prasarana following the recurrence of service disruption, Loke says that he does not hold the prerogative as the appointment of management is under the purview of the Ministry of Finance. Upon follow-up of the sudden closure of 16 stations on the Kallang Jaya train line due to an unstable automated train control system for 7 days from November 9th, Loke said the investigation report will be completed in 2 weeks' time. Loke added that in total there are 46 escalators, 16 lifts, 664 non-functioning light bulbs along with 17 areas with leaking issues.